Good evening, ladies and gentlemen. So we have no much time. Let's just get started. So my name is Olaiton, and my colleague here is Omar and Raphael. He's the one that will be taking you this evening on day 4 and the topic for today. Thank you very much. So Raphael, take the.
All right. Good evening, everyone. Quite a day, quite a pleasure meeting you guys again. It's another week. I guess we had fun last week. How was the week? And how has it been with trading so far? If you don't mind, I gave out an assignment during the weekend. I'm seeing new people here. Elisha, please, if you don't mind, I want you guys to introduce yourselves. Where are you coming from? Where are you resided? Let's get to know each other. Let's start with Elisha. Please, you can unmute and introduce yourself, please.
Yes, one after the other.
Lillian George.
Okay.
From Benin.
Oh, from Benin. Lillian, you're welcome. Welcome to day 4 of the Forex Trading 101. Another person?
Okay, my name is Elisha.
Okay. Elisha, you're welcome. Where are you joining us from, Elisha?
Onitsha.
Onitsha. Okay, you're welcome. You're welcome. Okwayemi, you're
Okwayemi is
welcome.
my name from Lagos.
Okay, from Lagos, you're welcome. I'm seeing Elvis. I'm seeing Leokobari Monday. Please, we kindly want to know where you're joining us from. While we do that, I will upload my screen. So please, let's save our time, please. Okay.
I'm here. I'm Emmanuel Kingsley.
Okay, Mr. Emmanuel, welcome. You're highly welcome. Omoyeni Richard. Okay, I guess you've been with us before. Ahmed David, you've been with us before. We're seeing Divine for the very first time. Divine, please, can you kindly introduce yourself? Okay. I guess some of us are shy. Anyway, let's get started. Once again, I want to say welcome. Welcome.
You can move to others.
Yes, welcome to day 4 of the Forex 101. We've done a few things last week, in which that's why I'm so concerned about those who are just joining us. But for those who are joining us, we have a WhatsApp group where the recordings are being uploaded, so you can watch those recordings and get in line with us. Get the recordings and get in line with us. Meanwhile, I'm going to share my slide with you so we can continue from where we stopped. So if you're finding anything strange or you don't understand where we are right now, please kindly understand that you need to watch the recordings being made before now. You need to watch the recordings being made before now. So just give me a few seconds to come up with my slide. Few seconds. Okay. Oh, where is this? Okay. Can you guys see my slide now? Can you see my slide?
I'm just seeing the flyer.
Oh, okay. You can see, okay.
I'm only seeing.
All right. Give me some few seconds, please. Few seconds. Few seconds, please. My system is kind of slow. And today's class is all about risk management. Being Forex traders, if you're a Forex trader who wants to make money from the financial market, you need to be aware of that part where we call risks and how to manage it. Under Forex, why trading Forex, there's a high rate of probability under it. And you know anything that works with probability, you need to find a way of mitigating it. You need to find a way of adjusting toward that part. So you should all be able to see my screen now. Okay. So can you see my screen now?
Yes, we can.
Good. For those asking for the recordings, I think the link was posted on the group, on the WhatsApp group, recordings for previous lessons. The link was posted on WhatsApp group, but it should be posted. Don't worry, you have it posted again tomorrow. It will be reposted tomorrow. So you can now have a bit. Yes. Okay, you'll be added to the WhatsApp group at the end of the class. A number will be dropped where you can contact and you'll be added to the WhatsApp group. Okay, so we're starting off right away. Now, this is risk management. And what are you going to learn in this class? How to create a proper risk management plan, how to use stop loss, stop order, how to calculate your lot size, and how to place orders using limit order to place your orders. Now, how do you do all of this? Risk management is that part of Forex that helps you stay longer in the game. It helps you stay longer in the game. Why? Because if you have, let's assume you have a $1,000 account. For those joining us for the first time, I'm this kind of person that loves, I love doing my things practical and I love my class being interactive. So when it comes to the part where we all need to talk, I'll give us the privilege of talking and we'll get involved. So let's assume you have a $1,000 account. $1,000 account. And you want to you want to start as a Forex trader. This is your initial deposit. This is your startup capital as a businessman who wants to trade Forex. Now, you can't just say, because I want to trade Forex, I'll have to risk all of my $10,000 on a particular trade that I feel should give me a result, should give me a particular result. Maybe your initial plan for the day is to make $3,000. Your initial plan is to make $3,000. The first thing you need to understand is this. In taking a trade, you need to understand how much distance is this trade having from where to where. Let me share my charts so you understand where I am coming from and why we are doing this now. Let me share my platform, my MT4, sorry. Okay. Where is my chart again? Now, can you all see this platform? Can you all see my chart?
Yes, sir.
Okay. Now, this is a Forex trading chart. This is a Forex trading chart. This is the MT4 on the screen. This is the MT4 on the laptop. Now, let's assume this trade, let me put something here. Let's have this. Let's say this is what we want to trade today. I took this trade today, SDJPY, and we had a 1 to, I think, 1 to 3, yes. We had a 30 pips profit on this trade today. But it was a risky trade, so I didn't post it on the group. We want to trade this part today. So let's assume after our analysis, original analysis, we discover that this is somewhere the market should react from here. We're looking at this resistance area. Now the market should act from here and start going down, as it has done right now. It should act from here and start going down. So during the analysis, you discovered this. You are waiting for a candle to form, maybe something of this nature, to confirm that the market is going to drop. After your analysis of seeing a possibility of the market going down, let's say you analyzed higher highs, higher lows, higher highs, higher lows, and you saw a break of market structure to the downside, give us a high here. So now we're expecting this to come like this and drop. So you're expecting the market to come all the way here, act on this resistance area for it to drop down to the downside. In seeing this, you have $1,000. $10,000, sorry. You already have $10,000 in your account. When you looked at this trade, your calculation was from where I feel this trade should drop, at least it should drop to this point. At least it should get to this place. If at all it's going to still go down, but you are short of getting here. And this is where you want to take your profit. Now, what are the criteria for considering a proper risk management plan? The first thing is this: stop loss distance. Stop loss distance. Second is your take profit distance. And the third, your capital. Fourth is amount to risk. Amount or percentage to risk. Amount or percentage to risk. So before you risk anything on the trade at all, this you should consider. These are the things you should consider. First, you need to start with, how much capital do I have? How much do I have in my Forex trading account? I have $10,000 in my Forex trading account. How much can you afford to lose out of this $10,000? That should be your thought process. How much can you afford to lose in $10,000 that will still make you, that will still enable you to trade tomorrow, that will still enable you to trade next month? Now, one thing you should be, which I know you should know, is in Forex trading, nothing is 100%. Nothing, it's not 100%. Why? Because we have that probability rate around your formula, which we call your formula of trading, which we call your trading strategy. So if you have a trading strategy that by statistics, it's proven to at least give you 50% win rates. That gives you 50% win rates. What 50% win rate means is this: that if you take 10 trades, at least you're going to win 5 of the trades. That's the meaning of 50%. Some strategy can be 80%. Some strategy can be 70%. So it all depends on your win rate. And some can still be 30. And at the end, you will still be profitable as traders. So what we're going is this: if you understand that part of probability, knowing fully well that, okay, I can take 10 trades. And at the end of these 10 trades, I can win 3, I can win 4, I can win 5. You understand your trading strategy already. It does not work in all trading conditions. Now, you saw this trade, you saw this opportunity here, and you feel you should be a part of it. you already note your distance, that if I enter this trade from here, let me make the charts clean so we can. If I take this trade from here, I want to place my stop loss here. Please, for those who don't know stop loss, if you don't know the meaning of stop loss, comment in the chat section below. I don't know stop loss. I don't know the meaning of stop loss. So I can hurriedly explain that before we go deep into this. For those who don't know the meaning of stop loss distance, please comment so I can hurriedly go into this. Now, you've decided that, okay, I'll enter from here and my stop loss will be here. Stop loss means that level where you think the market can't get to anymore. It has surpassed that area, it can't get to that place. Once it gets to that place, you are ready to lose whatever you have risked, depending on the market ability to go back to that place. So let's assume you had your trade here and the market went back to this level. Let's say your stop loss is here. Your stop loss is at this point. And the market went back to hit your stop loss. It will take you out of that trade in a loss. It will take you out of that trade in a loss. But meanwhile, before you place that stop loss, you had done your risk management plan already. You knew how much you'd be risking. You knew how much, you knew the probability rate of your strategy. That, well, this is one of the 10 trades or one of the 20 trades or one of the 200 trades I will be taking out of this account. One of the 200 trades I'll be taking out of this account. And if the market should hit this level, I have accepted, I will accept my loss. I will accept my loss and look for another trading opportunity. I will accept my loss and look for another trading opportunity. So let's assume that I want to make this clear before we go deep. Let's assume at this level here, you've decided to risk maybe, let's say $100. Like the market goes against my prediction or my direction, I agree. Let me lose $100. No problem. That's your risk. That's your risk. You already know your risk. Now, the part of reward, at least if you're taking a risk, you should have a reward for the risk. Now, you can't just take risks without reward. You now measure that if the market should go in my favor from here, I expect it to drop down from that point to this point. That is where this thing is, to this point. And let me measure it. If we measure from there, from here to here, that's about 65 pips. That's 65 pips. So, and that 65 pips should be giving you, if you're risking $100 for that, it should be giving you around $600. It might not be up to that, but we'll still come down. Let's just assume it's giving you $600. Now, for that $600, what have you known? You've known your risk, you've known your reward. You've known your risk already, and you've known your reward. And you have a $10,000 account. Now, if you take $100 out of $10,000, how much do you have left in the account? You have 9,900 left in the account. You have 9,900 left in the account. That 9,900 left in the account means if this trade goes against me today, I'll still have enough money to trade tomorrow. Do you understand this now? I will still have enough money to take trades tomorrow. If you're a swing trader, you've risked $100 for this week. Maybe you trade weekly, just one opportunity in a week, and you're good. If this market goes against you and takes you out for that week, you've accepted and agreed that, okay, I've lost $100 for this week. I will need to wait for next week to give me an opportunity before I trade again, risking another $100. If $100 is what you want to risk from the account, risking another $100 for a good reward. Now, the least you can have for your reward, please take note of this. There's what we call risk to reward ratio. Risk to reward ratio. Reward ratio. And what it means is this, that for standard of Forex, it is 1:3. 1:3. Some people do, personal preferences comes in. Some people do 1:1. Some people do 1:2. And some people will prefer 1:5, 1:10. If it's not up to that, they don't take that trade. What it means is this, that if I am risking if I'm risking $100, let me place it here. For somebody doing 1:1, it means if I'm putting $100 here, I want to risk $100 on this trade. And this is my entry. If the market comes to my entry here, I agree to make $100 profit. Once you get to $100 profit, I will get out of the trade. That's 1:1. 1:1. If you're the one of 1:2, if the market gives me $200 while I'm risking $100, I'm out of the trade. If the market for 1:3, if the market gives me $300 while I'm risking $100, that's good business. I'm out of the trade. 1:5, the same thing. I risked $100 to make $500. I am good. I am out of the trade. So and so it goes. At times, you might find a trade opportunity that might give you 1 to 10, 1 to 20, 1 to 21, depending on how good your skill is with analyzing the market. Depending on how good your skill is analyzing the market. Now, understanding that part of risk reward, you already know that if I risk if I'm risking $100, the first thing I need to calculate before I risk my $100 is your stop loss distance. Where did I put it the other time? Okay, here. Your stop loss distance. Here. Your stop loss distance. What it means is this, that from where I'll be entering the market, let's say this is our entry, to where I'll be putting my protective stop loss, where I'll have to protect myself that if it goes against me, that means I am wrong. My analysis is wrong, and I've accepted my error. Let's say this is your value. This is the area where you want to put your stop loss. You will need to measure the distance from that entry point to your stop loss point. From where you have decided to enter to your stop loss point. No, now the distance from here is what you're measuring. You're measuring your distance from here. From this part here to this part here, that's stop loss distance. From here to here is your stop loss distance. From here to here is your stop loss distance. Now, let's measure that. Let's do a quick measurement from that area. If we pick from there now, let me use my crosshair. Let's say from here to here, that's 20 pips. 20 pips is our stop loss distance. 20 pips is our stop loss distance. Mind you, we measure our stop loss in pips. 20 pips is our stop loss distance. From 20 pips, you need to measure now from my entry here. What are we trying to do now? We're trying to get our risk reward ratio. From my entry here to where I'm going to take my profit. What's the distance? Is it worth taking the trade or not? Now, if we measure that part from here to where this line is, that's 71 pips. 71 pips for risk reward. To 71, let's make it 70 pips, 70 pips. Now, when you check on the risk reward, what should it be? Divide 70 by 20 pips. 70 pips by 20 pips. That should give us what? That should give us what? 70 pips by 20 pips. Anyone hurriedly divide that, please? 20 pips. That should give us 3.5. 3.5. So that means, thank you, Ahmed. So that means it is a trade worth taking. It means it is a trade worth taking. I can decide I can afford to lose $100 since, yes, we don't know the outcome of the trade yet. We don't know what might happen. It might go and not still go again, go in our direction. But now, because of that understanding of probability that it might go and may not go, that shouldn't say I shouldn't risk. What if it goes in my direction? I'll be making 3 times what I am risking. If it doesn't go in my direction, I'll only lose what I have decided to lose. Do we understand this now? Please, if you do type yes in the comment section. If you do type yes in the comment section. Good, good. So with that understanding, okay, good. So with that understanding, you can afford to risk your $100 now. Without understanding, you can afford to risk your $100. Risk management is the holy grail of trading. There is no strategy that doesn't work in trading. Risk management is the holy grail. All you need to know is to understand that every day gives you an opportunity to make money. How be it that it might work in your direction or it might not work in your direction, but there's always an opportunity for you to make money. So your ability to carve out your risk management plan, your ability to carve out a plan which is clearly stated and you are disciplined enough to follow it, will make you profitable at the end of a trading week, at the end of a trading month. Should make you profitable at the end of a trading week or at the end of a trading month. But why people lose in Forex is this: they don't have a clear risk management plan. Maybe you have a $100 account and you want to trade this kind of trade and you're risking all the $100 on it. Meanwhile, some people don't know about risk management, so they don't even know they are over risking. They don't know. So this is what I'll be showing us today. I will show you how to calculate the appropriate lot sizes that will fit in the amount you have decided to risk and how to go about it. I will show us that tonight. So I believe we understand this part of how much to risk, your stop loss distance and your take profit distance. I believe we understand that part now. Put in yes in the comment section for anyone who doesn't. Let's know before we continue. Do let me know before I continue. Okay. So, okay, good, Divine. So now let's get to the part of how do we now calculate our lot size that will fit into our risk management plan. How do we now calculate our lot size that will fit into our risk? I started with the analogy that we have a $10,000 account in our disposal. I have decided that as a Forex trader that I'm having $10,000, it is $100 that I want to be risking on every trade I want to carry. Now you have decided by yourself, it's only $100 I want to be risking for every trade that I'll be trading. Good. You have seen the opportunity that you feel it should work in your favor. And you feel this is where I want to have my stop loss. This is where I want to put my take profit. And by our measurements, we have a risk reward ratio of 1 to 3, isn't it? 1 to 3. Perfect. Perfect trading opportunity. That's why we call it opportunity. Perfect trading opportunity. Now, what do I do, or how do I go about it? Now, let's put in these parameters. What you will be needing. Your measurement from your entry to your stop loss is 20 pips in distance. And that is all you need. Now, get to understand this. If you don't have a paper or biro, get one and write this. In calculating your lot size, these are the websites to make use of. myfxbook.com, myfxbook.com. You can use baby pips calculator. Baby pips calculator. So you can find this baby pips calculator. Just go on Google and type in baby pips lot size calculator. Go on Google and type baby pips lot size calculator. And add it or bookmark it. Bookmark it to your browser. Bookmark it to your browser. Bookmark it to your browser. So myfxbook.com or babypips.com, but I prefer the myfxbook.com, easier and simpler to use. So let's see what we have with myfxbook.com. Let me bring that up. myfxbook.com. So I'll be sharing my screen on that part. Now, let me go from the beginning. This is the calculator, but I want us to, for those who don't know how we got here. Now, when you visit my FSbook calculator, myfxbook.com, these are the things you'll be seeing. These are what you'll see. We did something about fundamentals the last time. My FSbook has its own fundamental calendars as well, which you can see when you come down to economic calendar here. When you come to economic calendar, come here, just click on it and it take you to the calendars we have for the day. It take you to the calendars we have for the day. As you can see them. These were activities that took place for the week. All of these are calendars, events that took place for the week. So you take note of the high, the low, and the medium. If you're using this, the low means that news has low impact, or the event has low impact on the market. So what you should be concerned about is the medium event and the high impact event, especially the high impact event. The medium event, we had one today, which is non-farm payroll. That was why the market was a little bit, this is high. Let me see if I can find, okay, today. Let me come to today. And you saw the market did at the hour of 2. Let's go, non-farm payroll, yes. Then, okay, this was what non-farm payroll, very high impact news, very high impact news. It happens every first Friday of the month, every first Friday of every month, every first Friday of every month. High impact news. So we have this. Now you should be cautious about this news. Anyone that has high impact, medium impacts, high impact, medium impacts, that you should consider before you take a trade. You should consider before you take a trade. It's going to affect the market either positively or negatively. So now let's get back to our calculator. Now we on FX, my FX book, and want to find our risks. The next thing you need to do is click on FX calculators. FX calculators. FX calculators. And you'll be brought to this page. Now on this page, click on position size calculator. Position size calculator. Click on position size calculator. So when you click on this page, it should take you straight to where you should be able to use your. Now here we are. Under this position size calculator, as you can see, you're seeing Forex currency pair here. So now on the example I made, I was showing us on my charts. The currency pair we had was New Zealand, Japanese yen. I want to sell that trade. The opportunity was to sell to make a profit. New Zealand JPY. So now we have currency pair here. All you need to do is to come to the scroll down button and look for NZD JPY. NZD JPY. Look for NZD JPY. Here we are. NZD JPY in the box. Your account, is your account in Naira, in dollar, in is it in Naira, is it in dollar, is it in USD? Most of us have our accounts in USD. So we leave this account currency in USD. You come down to account size. How much do we have in our account? We have $10,000 in our account. That is what we have in our trading account. Now, what do you want to risk? I said something initially, if you remembered. I said, okay, when you have that account, you had already calculated it that, okay, out of $10,000, it is only $100 I want to be risking per trade. Any trade I take is $100. And what is the percentage of $100 to a $10,000 account? Please do type that in the comment section. What is the percentage of $100 to a $10,000 account? What is the percentage of $100 to a $10,000 account? That's how many percent? How many percent of $10,000 account? 10%. Are you sure it's 10%? Are you sure it's 10%? What is 1%? So you've decided to risk 1% of that account. You decided to risk 1% of that account. All you need to do is come over here, come into the risk ratio area and put in 1. Now, for those who are having difficulty with calculating the percent rate, you can click on this box here where it says swap with money. Click on the box where it says swap with money. And when you click on it, it will change. So all you need to do is to type the $100 there. It will automatically understand that you want to risk 1% of $10,000. And we have our stop loss as calculated, our stop loss distance as 20 pips. The distance from our entry to the point where we want to have our account protected, 20 pips. So you put in that stop loss distance here in this box where it says stop loss pips. You put in 20 pips and you leave the remaining the way it is. So all you need to do now is to come and click calculate. Click calculate. And you have your answer here. So your lot size now will be what? 0.78. Your lot size will be 0.78. Your lot size will be 0.78. Okay, thank God the market is still. Let me enter a demo account so we can demo account log into. Let me put a demo account so I can show us. Now it is live. It's live. This is live. How many live accounts? Wow. I want to enter. I need to see serious. I don't have them accounts yet. Wow. Okay, so there we go. Now we have our lot size to be 0.78 lot size. We have we've known our lot size already, and we already know that we'll be doing 1:3 as our take profit. So we don't have a concern with that. Now let's go back to our chart. Please, can someone write this down for us? Our lot size 0.78. Someone should write it down. Our stop loss 20 pips and our risk value of $100. So I'll be sharing my screen with you guys. Let's do this. Good. So can you see my charts? Can you see my charts? If you can see my chart, type yes. Let me know before I continue. Okay, send. All right. I have just one person saying sent. I don't know about the others. Can you all see my chat, please? Jennifer, your question, please keep it aside. We'll talk about it immediately and we get to the end of this class. That's an important question. Let everyone learn. Please, let's hold on for the charts to come up. Still loading. Okay, so see a currency pair we can work with. Let me use automatically. Okay, I was trading this. Even I took this opportunity said, wow. Okay. All right, so where are we? Okay, let me use this. Let me use this one. Let me use this Aussie. So I'll be using Aussie USD for example. Okay, let me switch to what we're using initially so I don't get us confused. Okay. Now, this was where we wanted entering. We wanted entering from here. This is our stop loss, which we had measured already. So what did we call our stop loss distance? From our entry to our stop loss distance. Please, I need us to hurry up because I don't want the market to close on us while we're doing this. I want this to be a practical thing so we can all see what I'm talking about. What's our stop loss distance? Did anyone write that down? Okay, 20 pips, good. From here to here is 20 pips. Okay, let me use a live market, the part where the market is moving live now. So we can see how much the risk will be. Start from here. Let's say this is where we want to take our profit. Let's say here. Down on this line, we want to take our profit around here. Now we want to enter. So I'll go to a lower time frame. If that is up to, I want to know if it's up to 1:3. It will enter from here. 20 pips, 1:3 is not up to. I'm looking around 70 pips. 70 pips will enter from here. This is 57. Okay. We should be on that now. Okay. So let's say we want to enter from here. We want to enter our market from here. And this is where we want to take our take profit here. Now we've measured 20 pips our stop loss. Please always don't make your stop loss except for gold. Except for gold that usually comes with a higher stop loss, at least about 50 pips stop loss distance. For every other pair, do not make your stop loss exceed 20 pips. Do not make your stop loss exceed 20 pips. At least 20 pips. Some trades might give you, some currency pair might give you a stop loss of 10 pips, 15 pips, but do not make it exceed 20 pips. If the trade doesn't work, accept it and move on. Find another opportunity. If you have a higher stop loss, that demands that you need to have a higher profit level for you to make money, for you to end up being profitable. You need to have a higher profit, take profits area for you to have. So assuming you have a 50 pip stop loss now. Let's say 50 pips is around here. Let's measure and see if it's around there. Let's say we want to enter here and we'll have 50 pips here. Okay, this is 80. Let's say from here, we're measuring 50. 50 is around here. Okay. 50 is around here. We have 50 here. So this is where you want to place your stop loss when you're entering from here. Now, it means you have to measure from your entry point to give you at least another 50 pips in profit. Let's say 50 pips around here. 50 pips around here. Now, before I digress, I just want to hurriedly do this. Now we're using 1:1, and you have 10 trades. 10 trades. Out of these 10 trades, your win rate is 50%. You win 5 trades and you lose 5 trades. And let's do our calculation. And our risk reward is what? 1:1. That means you risk $50 to make $50. Now let's do our calculation. 5 trades. You have how much? Let's say you have $100 account. $100 account, and you are risking, say, $5 per trade. $5 per trade. So that means for every $5 you risk, you make $5 profit. Now you took 5 trades and you won 5. That gives you a profit of how much? $25. It gives you a profit of $25. Won or made as profit. You took 5 trades and you lost 5 trades. That means you've lost how much? $25. You lost. Did you make any profit at the end of the day? Did you make any profit at the end of the day? Yes or no? Type that in the comment section. No. Now, when you look at it, you do your plus or minus, you discover you're doing $25 profit minus $25 loss, and what you're having is $0. You end up not making any profit. You remain at break even with all your effort and everything. Now, let's increase our risk reward ratio. Let's say we're doing 1:3. That means for every $5 you risk, you're making $15. You made 5 trades and you won 5. You made 10 trades, you won 5, which means you kept $15 for every trade you make. Now, 5 times 15 will be 75. You made $75 profits. $75 profit. You took 5 trades, another 5 trades, you took another 5 trades and you lost, which is $25 loss. Now, when you do your plus or minus, 75 minus 25, that should give you how much? A $50 profit. Do you now understand where we're headed? Guys, do you understand where we're headed now? Good. So my advice is this: always look up for 1:2 minimal, 1:2 minimal, 1:2 minimal. So let's take this out. Now, I want to do a clear example here. So we already know we have a 20 pips to risk on this trade. Let's say 20 pips should fall in. Let me measure the distance from our entry. We're entering from here to our 20 pips, which is around here. Yes, our 20 pips is here. So we're doing 20 pips here. This is where our stop loss will be. But there are actual places where you should put your stop loss. This is just an example. You don't put your stop loss somewhere here in the market, because the market can turn back at any time to clear you out. There are protective areas where stop losses should be. When we get to the part of trading strategy, we'll talk more on that. Now, our entry is here. Our entry is here. Our stop loss is here. And our take profit is down the line. Our take profit is down the line. So now let's enter this trade. Let's write our parameters out. Our lot size, what's our lot size again? Lot size is 0.78. Our stop loss is 20 pips. Our take profit is 70 pips. 70 pips. Now, we already know our lot size, which is very important. The next thing you need to do is to take out your support price level. Your stop loss price level. Your stop loss price level. We already know we want to have our stop loss here. So now is to know the price equivalent of that area. So what I will do now is to put up a horizontal line on that stop loss area. And this is the price level we have. 95858. 95858. 95858. Now I want to enter my trade on this account. All I need to do is to click on new order, and I'm selling it, right? I believe the market should drop down. This is an example. I believe the market should drop down. So all I need to do is, where we see volume, I'll put in 0.78. That's my lot size. What's my stop loss price? My stop loss price is the price we have here, 95.858. 95.858. What's my stop and take profit price? My take profit price is 94927. 94.927. And what would I do? I'll click on sell. Now we've sold the market. If you see, you should be able to see my line here. We've entered. Let me clear all the lines now so we can see them properly. Let me take out all the horizontal lines. Take out this, sorry, take out this. Good. So, as you can see, there's a green line here. Okay, let me do this. Let me pick this one here. Okay, you didn't see my execution page. Was I fast? How come you didn't see that? This is it. Sorry, let me bring it up. Bring it up so you can see. This is my execution page. My stop loss, my lot size is what we've entered here as volume. My stop loss is what we've entered here as the stop loss price area. My take profit is what we've entered here as the take profit area. And then we clicked on the sell button. Then we clicked on the sell button. So where are we? Okay. Now this is our line. This is our execution line. This is our stop loss line, saying if the market hits this line, I'll be losing a certain amount of money. This is where we're making our profit. Now, let's see how much we'll be making. Let's see if what we've just done followed what we had in mind. If it followed what we had in mind. Now, all I need to do is to place my mouse on each, and let's see. On the stop loss, let me close this. Why is it not showing? Okay, on the stop loss, look at how much we're risking. We're risking 86.08 US dollar. 86.08 US dollar. When you add the broker's commission to it, when you add the broker's commission to it, you should be making it should be a plus or minus $100, plus or minus $100, and this is the broker's commission. This is where you find the broker's commission. See it here, 0.06 on that trade. I think it should be the last one. Sorry, no, this is the broker's commission. For $4.68. That's the broker's commission. So thereabout, if you're putting that 4.8 commission, you're having a $90 plus 90 point something dollar as your risk, which is never up to what you had budgeted as $100. Now let's see how much you will be making, risking the amount as our take profit. You'll be making $377. You'll be making $377. Now, if you look at what we just did, is it up to 1:3? Please, I need your answers. Is it up to 1:3? We had a risk of our risks after calculation. We had plus or minus, let's say $92. Plus minus $92. I will have a reward of $377. So please, let's do our risk reward ratio. What do we have? What do we have? We have approximately what? 1:3. So do we now understand this part of risk management? This is how to calculate your lot size. Lot size now fit into your risk appetite. Lot size now fit into your risk appetite. Is anyone confused? Any question regarding this section? Any question regarding this section? If you do have a question, please let me know. Any question regarding this section? No. No. So I believe we understand this part. Jennifer, do you understand this part? Is Jennifer there with us? No problem. My problem is the lot size. Okay, what's your problem regarding the lot size? Okay, good, Jennifer. Richard, what's your problem regarding lot size? I just showed you how to calculate it now. I just showed you how to calculate it. Now you want to take us back. Let me hardly do it again. We have $10,000 accounts. You will need to watch this over and over. You need to watch this over and over. You have a $10,000 account. Okay, let's go straight to the website. So now you want to calculate your lot size. This is the website to use, myfxbook.com. You already have our parameters here to be filled. Currency pair, account currency, account size, money use, stop loss, and all of that. Our currency pair is NZD-JPY, which we needed to come and search for. NZD-JPY, and here it is. We click and we have it filled in. Our account is in dollar. Our account is domiciled in dollar. There are various account base you can have. You can have that in Aussie, you can have that in Canadian dollar, you can have it in CHF, JPY, Euro, whatever. But we have our own in dollar. How much do you have in our account? We have $10,000 in our account. And we've decided I want to be risking only $100 per trade. I don't want to risk more than $100 in every trade. And you have your $100 here filled in. If you don't know how to calculate in percentage, let's say you have $100 and all you want to be risking is maybe 3% of your $10,000. You just want to be risking just 3%, $10,000. And all you want to risk is just 3% of your $10,000. All you want to be risking is 3% of your $10,000. So once you do your calculation and it tells you, okay, 3% of $10,000 should be how much? People in the house, let me ask Richard. Richard, 3% of $10,000 is how much? 3% of $10,000. Okay, I'll take it to be 300, but it's not 300. There are still some little dot behind it. But let's say 300. You're risking, that means here you will fill in 300 as the amount you want to risk. You've already calculated your stop loss. You know how much your stop loss distance from your entry. So all you need to do is to click on calculate. Yes, you will have access to the recordings, don't worry. So you click on calculate, and once the calculated value comes in, it means this is your lot size now. This part where we say sizing. So your lot size that will fit into the criteria you just filled in is 2.35 lots. 2.35 lots. And that is what you use to enter your market. Do you understand that part now? Do you understand it now? Do you understand it now? Good. So, now, what have we done so far? We've talked about risk calculation, how to calculate a proper risk management plan. We've talked about lot size, calculating our lot sizes. So where we are now is to talk on how to use stop orders and how to place limit orders. How to place stop orders and limit orders. So let's start with the one for stop order. Let's start with the one for stop orders. Let's start with the one for stop orders. Now, can you all see my chart? Can you all see my MT4? Ezekiah, please keep your question after the class. We'll talk about it when we finish this. Let's not get distracted. Still have a lot to cover. So let's assume we want to, after calculating it, we've gotten we've gotten our, where is it, our value. We had our value for our lot size. We had our lot size for 0.78. That's our lot size, 0.78. We have our stop loss at, what's our stop loss again? Let me see the value here, 20 pips. Now, our value for stop loss is 95.859. Take profit. Take profit, which is TP. Take profit. Take profit is 94.930. 94.930. Now we want to place a stop order. Want to place maybe you were added to a trading signal, or someone is giving you signals, and it comes with a signal of enter a trade. Let's say the trade call is this. The trade call is pound. Okay, let's use this example. NZDJPY. Mind you, please, wherever you see S, that's Z. My Z is bad on the keyboard. So NZDJPY. And the sell says sell. The trade says sell. The instruction is sell. Entry price. Maybe it says sell now. The sell now will be an instant execution. Let's say entry price is, I give you an entry price of 95.672. Or let me say 95.655. Sorry, let me make it something in the future. 545. 545. And we have our stop loss to be of these values we've taken out already. Stop loss of 95.859. 859. Take profit. Take profit is 94.930. Let's say that's our take profit. Now you want to enter a stop order. You want to enter a stop order. All you need to do is to click on the new order button. Click on the new order button. This is our new order button. We have our lot size already to be 0.78 based on what we have decided after calculation saying, okay, I want to raise just $100 out of my $10,000, and the lot sizes and the stop loss I was given. The stop loss I was given is where is it? 95.859. My take profit that was given was 94.930. So I think I am good with this. And after calculation, you found out your lot size is 0.78. 0.78. So all you need to do is fill in that lot size you've calculated, take your stop loss value, which is 95.859. Fill in that value, go to your take profit as well, fill in the take profit you were given, 930. Then come to market execution. Come to market execution, click on market execution, pending order. Then you enter what the instruction said. If the instruction said sell limit, sorry, it could be sell limit, it could be sell stop, sell limit or sell stop, whichever one that comes in, sell limit or sell stop. Now let's assume it's a sell limit. You click on sell limits. Where you see this cell, what you see is the sell limit. You click on that cell. Then you enter the price the instruction provided or the prompts provided, and this is the price 95.54545. So let's say it's 95.545. Then you click on place. Now, why is it said invalid? Because it has gone past that area. So let's use a sell stop. Now the sell stop has been placed but not activated. This is the sell stop line here indicating it. So until price comes down beyond that sell stop. Okay, who has this? Until price comes down. Monday, watch the other videos. We talked about sell orders and sell stop. Try and get the recordings for other videos. I explained that in details there. So let's say we have the sell stop now means we're expecting price to come down beyond this order and activate us. Price should come down beyond this order and activate us, while our stop loss still remains at this area. Our stop loss remains at this area. So if the price comes down now beyond this area, the market will go in and we should be expecting the drop to happen according to their instructions. According to their instructions. According to their instructions. Did we get that? A link will be sent to you. You'll be added to the WhatsApp group. You'll be added to a group where you will find the recorded videos. Don't worry. At the end of the class. Ahmed, you can drop the number. Drop the number for those who are not in the group so they can chat up my boss for them to be added. Good, thank you very much. So chat him up. Please chat the number up and request to be added. So that is that about placing stop orders and controlling risk. Placing stop orders and controlling risks. Placing stop orders and controlling risk. Placing stop orders and controlling risk. Now, Jennifer, you chatted me this afternoon regarding a question, and I said you should put it up. Unmute yourself and ask your question, please. Because I want everybody to hear. Unmute and ask your question. You can see the trade we entered is in profit. Assuming it's a live account now. At least you're on $12 profit. We're looking at you on $12 profit. I already know the trade was a sell trade anyway because NZDJPY was on sell momentum today. That's why I had to pick that. So Jennifer, are you there? Jennifer, ask your question.
Yeah, it's about, sorry for the delay.
Okay.
It's about the trading platform,
All right.
which is on updating. When I'm trying to log on to the trading platform, I'm unable to access the demo account.
Unable to access the demo account, or you're unable to place trades.
Let me say play straight.
Not access the demo account. It is play straight because I know so many people are having that problem too. It is play straight and not demo. Some of you might have registered your demo account already, and maybe you saw a signal or you wanted to act upon a currency pair. You saw buy and you placed buy. It wasn't buying or it wasn't even responding.
Play straight.
Isn't it?
General. It's not like that. Like
okay.
It's just on and waiting to update.
Waiting to update.
Yeah.
On your laptop.
On my laptop.
What platform did you download?
Do Prime.
Yes, Dual Prime. What is it? MT4 and MT5?
MC4.
MT4. And this is, I'm
Yeah.
using MT4 right now, so it doesn't give me such. What you do again is this. Uninstall the one you've installed before, then re-download again.
Okay.
Re-download again. Then on the
And
part
also
where you go
under the
ahead.
journal, I'm seeing something like connection failed. And
Okay, there was
sometimes
that means the account details you entered was wrong. Now, when you were entering, were you copying the username and password? Were you copying the account login and the password, or you were typing it?
no, I was typing it.
Okay, then the next time you do that, try to remove backspace the password, backspace it, the password area before you type.
Okay.
So it's possible there's a space between what you were typing, and so that would have added something else, because every little touch on the keyboard adds something to it as a password. You
Okay.
understand? So backspace, clear off, then retype again. Type manually, don't copy. So
Yes,
where you're seeing capital letters, let it be capital letters. Where you're seeing small letters, let it be small letters.
okay.
Do you understand that? Try that. If it doesn't work, let me know.
All right.
All right. So any person with any other question, please. Questions. Questions, questions. Someone asked a question before I forget. Ezekiah, what was your question, please? You've been allowed to talk. Please do talk. Let's hear you.
Yeah, hello, good evening.
Evening, welcome.
Actually, the thing is that I don't have difficulty calculating the lot size, but I don't actually understand the concept behind the lot size. What is the usefulness of the lot size? If I get the value after calculating it, if I decide not to follow the lot size that I was given, if I decide to
Okay.
go lower, how does it affect the trade?
Now, if you decide to go lower with your lot size, let's do this assumption here. Let's make this assumption. This was our entry. This is our take profit area. This is our stop loss area. Now, when you look at what we are risking, we were risking $100. Even it wasn't up to $100, but let's assume it was $100 risk to make $337 profit. Let's say you're risking something lower. Let's say you're risking, now we'll work on this risk reward ratio. The risk reward ratio is 377 divided by 100. That'll be what? 3.77, right? So we're doing 1:3.77. Now, please put that at the back of your hand. That's our risk ratio, 1.3. Let's say you're risking something lower than $100. Say you're risking $20. $20 risk. Now you want to see the effect of the lot size. Your profit remains the same. 20. Now, let's do the same risk reward ratio, 1:3. 20 times 3.77. 20 multiplied by 77, 3.77. 20 multiplied by 3.77. 20 multiplied by 3.77.
That's 75.4.
75.4. Now, do we have a difference between your profits at the end of the day? If you're risking $100 and you're risking a $20.
Yes.
And what's the difference?
That's a whole lot different because here we are making 377 and the other place we're
Okay,
making
making
7.4.
75. So can you get anything there now? Do you understand what has happened there?
Yes.
They hire your risks, they hire your profit.
Oh, okay, I get now.
They
Thank
hire
you
your
very
risks. You're very welcome. They hire your risks, they hire your profit.
Okay.
And the lower your risks, the lower your profit. But another analogy, that is on the profit side. The higher your risks, the higher you lose. If your trading strategy is not up to par, the higher you risk, the higher you lose. But the lower you risk, the lower you lose if your trading strategy is not up to par. So you're seeing the pros and cons now. So while you're learning, you could use a lower lot size. When you're beginning to gain confidence in your strategy and you understand it more, you can now increase your lot size. Do you understand?
Yes, very well. Thank you.
Good. You're very welcome. So any other question? Any question? Okay. Oh, yes. That was the reason we were blowing accounts. Risk management. So someone wants to talk.
It's me. Yeah. You talked about placing trades, right?
Yes. Yes, ma'am.
Yes. And if I want to place like 10 trades, how do I place it? Is it that I place it all at once or
Now,
it's a gradual?
the 10 trades you want to place. First thing is, what trades are you placing? Is it of the same currency pair or different currency pair? That's number one. If you're placing a single pair, say maybe like what we just did now, you found a trading opportunity on this pair and you want to open 10 positions. You want to open 10 positions. First thing you need to do is to understand your risk value for all of the 10 positions. This is a complex part. Some of you might get confused now. Is to calculate your risk value for the 10 parts, to have a risk value for the 10 trades. How do you do that? Let's say you have like that $100 you want to risk. Let's say you want to risk $100 for one single trade. For this $100 now, you decide, I can't risk $100 on one trade. Let me risk it on 10 trades. Let me put this $100 on 10 trades. You already know your stop loss to be 20 pips. And your take profit to be 70 pips. So all you need to do now is divide that $100 by 10 trades. $100 divided by 10 is how much? 100 divided by 10. Jennifer, $100 divided by 10? $100 divided by 10 is $10. So that means you'll be risking $10 per trade. For the 10 positions, $100 per position. $100 per position. That is what you'll be risking. So now to calculate the lot size for each of these 10 trades, 10 positions you'll be taking, you go back to your calculation size calculator. Let me open. Go back to your calculation size calculator. Let's go back there and orderly do this. Now, in the place where we have account size, you have how much? $100. But you already know the amount you want to risk, which is $10. Your stop loss remain the same, 20 pips and all of that. You place on calculate and you have 0.08. So that means on each of the positions you'll be opening, it will be what? 0.08, 0.08, 0.08, 0.08 in 10 places. When you calculate all of that together, it will give you the sum total of $100. Do you understand that?
Yes, sir.
So while you open 10 positions of one currency pair, you're still not risking more than the $100 you had decided to risk initially. The only difference that you might have here is this. While you open 10 trades, let me go back to my chart. Now, while you have 10 positions opened, it means you have different profit levels you are targeting. There are different profit levels you're targeting. Now, let's say this is profit level 1. This is profit level 1. This is another profit level. This is another profit level. This is another profit level. So what you're trying to say is maybe you have you have different profit levels up to maybe 3, 4. What you're saying is you enter 10 positions, your first profit level maybe for the first 3 trades might be here. Your second profit level for the next 3 trades might be here. Your third profit level for the next 3 trades might be here. While the last one, which is the 10th trade, might be this last part. So while the market is going, when it gets to this level, the first 3 trades will take you out in profits. The next 3 trades will continue, will take you out in profits. The next one will come out and take you here in profit before the last one comes out here to take you in profit. Do you know why people do this? Do you know why they take multiple positions on one trade? One, the reason for doing that is one, there is something we'll call partial profit. The first trade covers your risk. If it comes in your position, it will make you, at least, it should be able to make you the amount you've risked so far. You should be able to make the amount you've risked. So whatever this trade, this one, and this one are doing, we call it risk-free. You're no longer risking your own money. And you still have the advantage of making more money. Why? Because all of these will come, if they come to take you in profit, it take you in profit. Now you're riding on that probability ratio of, I don't know where the market might end. I don't know where it might stop. But I want to believe it will keep going down. I want to believe it will keep going down. Now, for those who are asking on how to do this on the mobile phone, in the next section, which will be tomorrow, please remind me of this question so I can show you that on my phone live. I can show you how to go about it. It's still the same process. Calculate your risk reward level ratio, then just keep clicking on new, and you put in the parameters. Click on new, the same parameters. Click on new, the same parameters. Then if you have different take profit levels, you put in your different take profit levels. And if you want to use one take profit level, which is risky, you can at the same time put one risk profit level, 1 TP. Can all the positions have the same entry? Yes, they can all have the same entries. All these positions can have the same entries, and all these positions can still have different entries. Like this now, let's use this for example. If you're using same entry, like where we enter this trade, you can open all the positions on that level. You can open it all on this level, or you'll be having maybe different take profit levels, like we have them here already. And you can still enter them on different positions. How? Let me find a trending market that we can use. I want something. Okay. Let's use this for example. Let's say you came down, the market broke this structure, and you want to enter your first trade. You entered your first trade here. Let's say you entered your first trade here, and the market went down. That is trade number one. You enter only one position. So you have 9 positions to go. When the market came back to this level, suspecting that at this point, the market should go down again. Now, this has given you a bit of confirmation that the market might go down. Your stop loss is here. So once the market got to this level, you can now enter that 9 positions. You can enter 2 here again. 2 here, and place your stop loss around here. Now you have 2 positions here, 2 or 3 positions here. You have 1 here, which is 3. While the market got down, you're expecting it, and anytime soon it should come back, maybe around here. Come here before we see it going down again. You can enter like 4 positions here. We call this pyramid entries. You can enter them here again and have your stop loss here. Do you understand that part? Now, so there are different ways of entering multiple positions. Yes, cumulatively, the commissions will take its effect as well. It is still the same thing. If you enter it once as a $100 risk value, and that's 0.78, it will be the same thing. If you entered it singly, it will still be the same thing. Maybe you entered it 0. Whatever you've gotten at 0.08 singly, you still be charged single commissions. So it's still the same thing. It is just your technique and your reason behind it. Your reason behind it. So there are different reasons why people take multiple entries. Some people who are scalpers take multiple entries because it's a short distance. So major scalpers majorly do 1:1. Scalpers do majorly 1:1, which means the risk may be a $20 to make $20, and that is why they enter multiple. So they capitalize on that short distance move. Let's say a scalper sees this and enter from here, and it feels the market should get to this level. So the scalper might enter 10, 20 pips at 10, 20 trades at the same time, all at the same time. And once it gets to that level, it cuts them to at the same time. Because if this is a short pip movement, if you entered it with, let's say, $1, you can't make enough from this short movement. But if you entered it on $1 in 10 positions, you'll be making enough. But if it goes against you, you will still lose more too. That's the way it is. I just explained that now, Emmanuel. I just talked about that now. How to enter, I don't understand. You said I don't understand how to enter a multiple entry positions in a currency pair. I just explained that now. It is still the same thing. You get the recording of this webinar. That should answer that question. That should answer that question. It's 9:30 already, and I guess we've talked about all we needed to talk about. I want to invite my boss over. Okay. You're not seeing my screen. How come? Well, you can see my charts now. You can see my MT4 chart. Lillian. You can see my MT4 chart. Well, not to worry. You'll be having a recording of this video, so you should be able to watch and understand. Just take your time. If you don't understand the first time, try and rewatch again. At least watch 4 or 5 times to get the message clearly. It's not something you get once and for all. So do not even think of getting it once at a go. You have to watch, practicalize, watch, practicalize, watch, practicalize, experiment. You understand? During your period of experimenting, you begin to get them, begin to understand that. All right. Let me see. Okay, I think the network is bad for my boss tonight. Now, please, I said something the last time. I was going to send an ebook, and none of you reminded me about the ebook. Maybe you found your way around it. Glory be to God. Thank you for making my work easier too. And I would like to know how many people participated in trade this week? Like you took action in trade activities this week. I gave out an assignment. I know no one is talking about the assignment. No wahala. Okay. You did the assignments, you watched candlesticks, you saw their formations. No problems, no problem. Okay. I'll send the ebook. The ebook will come along. It might come before or after, but put a reminder for those who are in the group. Put a reminder on the group regarding the ebook, because a lot of things might just come to my mind and I might not remember tomorrow. So, okay, you're using moving trend Fibonacci. Okay, that's good. You blew your $50 account. Well, that is part of your learning. Blowing a $50 account will make you sit up and begin to learn. Many of us blew more than $50. We blew more than $50. We spent more than 18 hours every day looking at this chart to get to the level we are right now. So it's not something you wake up overnight and well, Emmanuel, you were here the last time, but I don't understand what's going on. A number was dropped. If you want to join that group, chat with the person on that number and you will be added to the group. Request to be added to that group and you'll be added. Request to be added to the group and you'll be added. So my people in the house, I guess we all have value this night. We had value and we enjoyed ourselves, isn't it? Good, good, good. I love seeing this. You're very welcome. So tomorrow we'll be doing more of, we'll be talking more of we'll be doing more on hold on, my screen is freezing out. We'll be doing, oh wow, what an interesting thing tomorrow. Tomorrow we'll be working on creating a trading strategy. Every trader has their peculiar way of understanding the markets. What I see, you might not see. What you see, I might not see, because of what you have trained your brain to. You've trained your brain in a way that it sees or views the market. So by tomorrow, we'll be talking about some certain tools we can use. Some certain tools we can use to bring up our own trading formula. Some of us might be very good with indicators. Some of us might just be the kind of trader I am right now. Just use just your charts, just the candlesticks you're seeing right now. Some people might need other helping hands like indicators like moving average, Fibonacci, trend lines. Some people might be good with that. So you will find your personality and your type of trader around what we'll be doing tomorrow. So it's a class you shouldn't miss out on. You shouldn't miss out on that class. I know of a trader back then in 2018, I guess Yosha, if you know Yosha. Yosha is a Hausa boy. Yosha uses only Fibonacci. This is what he uses. Just this tool you're looking at on the chart right now. And he waits for the markets to get to a level maybe around, sorry. He waits for the markets to move from where it is maybe to one of these areas we call Fibonacci areas, and he will enter his trade. That's the only tool he uses. So some of you might be that kind of trader, and he's a multi-millionaire. Some of you might be that kind of trader. Some of you might just be support and resistance kind of trader. So we'll be doing all of that tomorrow, and we'll get to see where we are. So I think we have come to the end of today's class, and I want to appreciate you guys for having spent your time with us on this class. So I'll urge us to meet same time tomorrow, and let's make it a worthwhile class. Let's make it something interesting. Please, for everything we've learned so far, you can do some revisions. Tomorrow is Saturday. Spend some time, 2-3 hours. Do a little bit of revisions. Do a little bit of research on what we've talked about. You will learn additional knowledge from what we have just spoken about. But mind you, let me give you a deep secret. Whatever you're learning from us today is not the end of it. You're just starting out. If you want to adopt a mentor, somebody who you feel I can follow the trail of this person, make sure it's somebody who is profitable. Make sure it's somebody who is just one person. Do not take multiple mentors in trade. Do not take multiple mentors in Forex trading, because if one is telling you A, he's seeing it from the perspective of A. If the other one is telling you B, he's seeing it in the perspective of B. And when you be applying them, you want to apply A and B together. And it might cause a bit of confusion for you. And anything that is not clear in trading, you can't be profitable out of it. Do you understand? Do you understand now? So please, let's get that at the back of our minds while we undergo this journey. Do you understand? Okay. So I want to believe we've come to the end of today's section. Please, let's make it a day to meet tomorrow. Let's make it a day to meet tomorrow. I appreciate you guys and see you tomorrow. Have a wonderful night rest. Thank you all for coming.